Good afternoon, everyone. I am Rakesh Sisodia from Soryabhumi, Chittorgarh. Pleased to welcome all to this webinar organized by Continuing Professional Education Committee of ICAI. It is my privilege to moderate the 1955th webinar on management practices for internal controls and recent changes in Income Tax Act 2025. As the professional environment continue to involve chartered accountant must continue to upgrade their knowledge and skills. The CPA committee plays a vital role in supporting members by organizing webinars, seminars, conferences, and other learnings. Initiative while also encouraging professionals to give as speaker and leaders. Today's program consists of two sessions of 1 hour each. First topic management practices for internal control. Learned speaker CA Devji Sharma from Gurugram. Context Act 2025. Learned speaker CA Payal Chauhan from Jaipur. We are honored to have eminent speaker who will share their valuable insight of these important topics. I am confident that today's session will be highly informative, practical, and interesting for all of us. Thank you. At this moment, I sincerely express my heartful thanks to the dynamic chairman of CPA Committee 2025-26 CA Satish Gupta and the vice chairman CA Vishnu Kumar Agarwal for enhancing the quality and global reach of our CPA programs through the successful implementation of new initiatives throughout the year. I also extend my special gratitude to CA Satish Gupta for giving me the opportunity to serve as the moderator of this webinar. I would like to invite our first speaker on topic management practice for internal control. Before handover, it is now my privilege to introduce our esteemed speaker, CA Dheeraj Sharma. He is a result-driven chartered accountant with extensive expertise in internal controls, risk-based auditing, sustainability practices, and fundraising with experience working alongside professionals from diverse international backgrounds. He is an active researcher and author, having presented at national and international conferences and published numerous research articles in reputed journals and publications. He is a skilled communicator with strong analytic drafting and negotiation abilities, regularly speaking at professional forums and maintaining strategic relationship with government authority and business communities. He has held leadership role across various firms, serving in capacity such as senior associate, managing partner, vice president, and CEO. We are fortunate to have you with us today. Sir, I now request you kindly take over the session. Thank you, sir.
Thank
Welcome,
you.
sir.
Thanks a lot, Rakesh sir. Thank you for such a generous introduction and giving a beautiful start to this session. My warm greetings to Chairman of CP Committee, Sri Satish Kumar Gupta ji in his absentia, and Vice Chairman of the Committee, Sri Vishnu Kumar Agarwal ji, again in his absentia. Today's moderator of the session, Sri Rakesh Sisodia ji from the land of history, Chittorgarh. Co-speaker of the session, Payal Chauhan ji, the entire team from CP committee, Ginni ma'am, Akshat ji, and all the participants. It was mentioned by Rakesh sir that this is 95th webinar of CP committee. It itself, the number of this webinar itself defines how unparalleled efforts the CP committee is putting for the benefit of our members. Organizing 95 webinars and still continuing their efforts just to ensure that our members should learn something new. They can interact with the speakers, and in fact, being a speaker, we also learn many things from the questions asked by our members. So kudos to all the team members of CP committee and all the participants, because participants are the backbone of every program. The way you join, the way you ask the questions, the way you interact with the faculties, this is the beauty of these programs, and this can only define the success of these programs. So warm greetings to everybody. I am conducting first session. My topic, the topic assigned to me is management practices for internal control. So let me start with my presentation also. And I request all the participants, please ask your questions in the chat box. We will take the questions twice in this session. In middle of the session, so you can put your questions by 4:20, 4:25. Those questions will be taken up in middle of the session, and then at the end of the session also we will take the questions, because I may not be able to continue the session till 6. After 5 p.m. next speaker of this program, CA Payal Chauhan ji, who is going to deliberate about some changes in new income tax act 2025. So she will continue the session, and I will have to leave the session. So please ask your questions continuously during the session. We will cover twice in this session. Management practices for internal controls. First of all, whenever we discuss about internal controls, specifically in between chartered accountants, what comes in our mind? The first thing which comes in our mind, that is the auditor has to report about internal controls. The second thing which comes in our mind is the management is responsible for internal controls. Management is responsible for designing of the controls, implementation of the controls, and ensuring the operating effectiveness of the controls. And at the same time, the auditor has to comment on internal controls, whether the internal controls placed in the organization are sufficient, commensurate to the nature and size of the business. But auditor comments on internal control only when the auditor is appointed under the Companies Act. If there is an organization, that is proprietorship firm or a partnership firm or any such other organization where there is no such auditor appointed under Companies Act, then whether we need to worry about internal controls, is there any requirement that we need to think about internal controls? Obviously yes, because internal controls are not only related to compliance. Compliance is a very we can say latter part of our internal control process. It comes at the end of the process, just for the reporting purpose. The ultimate requirement of internal controls, or ultimate benefit of the internal controls, it is enjoyed by the entire organization, including investors, management, the team members, even all other stakeholders also, be it vendor or customer or any other stakeholder also. That is why management is always concerned about internal control. And when the management is not concerned about internal control, we will discuss 2-3 examples. What happens with the business, how legacies collapsed. In our personal life also, we see many of such examples. While leaving our home or office, what we do? We lock the door and we check it twice. So locking the door, that is our control, and checking it twice is our testing. It generally happens, we check it twice. We keep password in our mobile. That is again an example of internal control, because where the control fails, fraud or losses can enter, mistakes can enter, errors can enter. So that is why controls protects an organization, a person, any entity, even any government or any institution from errors, mistakes, fraud, or any kind of losses. If controls are strong, mark my words, if controls are strong, organization grows safely. If controls are weak, there may be chances of problems, frauds, many penalties, reputational risk, many kind of losses can happen to the company. Let us take an example. On our screen, we see there was a company, Kodak. There was a time when Kodak was the global leader in photography. Kodak was the manufacturer of cameras, manufacturer of camera reels, and Kodak was enjoying the number one position in the photography segment. What happened to that? Some people says the time changed, technology changed, and digital camera was introduced. That is why Kodak failed. So let me clear you. I also mentioned here, in 1975 itself, Kodak invented a digital camera. So this cannot be a reason of failure of Kodak. Years later, Kodak filed their bankruptcy. What happened to that company? The failure was not related to operations. It was related to strategy. Basically, the management, whenever they discussed about the growth of the company, they noted that they are enjoying the legacy business in the photography business. They were earning strong profits from the film business, reels business, from the cameras business. So that is why they can never assess that mobile phone can replace the camera. Even they did invention, they adopted the technology, they were advanced in the technology of photography, they developed the digital camera, their cameras were able to be used with the memory card, with the help of chips, without requirement of any reel or any film, but still they failed because the failure was not operational, it was strategy failure. The management did not adequately assess the environmental risk. They assessed the technological risk in their own segment. But once the smartphone came, it replaced the cameras. While the digital technology was emerging in that environment, in that particular time frame, in that particular segment, initially they failed to assess. So in the case of Kodak, what we can learn, the internal controls, they must support the strategical agility. The flexibility should be there, and the control should not protect any outdated business model. In the case of Kodak, the controls were supporting outdated business model of the reels or the cameras. That is why they failed. Let us take another example. This is Tata Nano. Again a case, it was a dream of Ratan Tata ji. Let's say Ratan Tata ji committed that every Indian should be able to own his own car. In the year 2008, Tata Nano was launched as world's cheapest car. What was the specialty of Tata Nano? It was the world's cheapest car. And why the project of Tata Nano failed? Because it was marketized as world's cheapest car. That means your attribute can become your weakness. It can become the reason of your failure. Otherwise, the vision was very much powerful to provide an affordable car, affordable mobility services to middle class families in India. Completely indigenous car. It was vision of Tata ji. It was in fact dream of many people. There was no issue with the management, even though management faced some challenges with the target of cost cutting. But the main problem was management only focused on Laktakia car. They only focused on cost cutting. They never thought that their marketing was their weakness. They marketed this car as cheapest car, cheapest car, cheapest car. And the person who were planning to purchase Tata Nano, they started to think, if I will purchase this car, if I will drive this car, people will say, दुनिया की सबसे सस्ते गाड़ी से जा रहा है. So that branding a cheapest car, it was the main reason behind failure of Tata Nano. This was an example of reputational risk. Mismanagement of brand, mismanagement of market intelligence inputs, and lack of reaction on the feedback received from the customers. Now moving ahead, everybody know operational risk. That means the risk related to functioning of the entity or the organization. Financial risk, it can be related to over interest liability, over loan, or lack of working capital. Any kind of financial risk may be there. Compliance risk, if you do not do any compliance, there may be certain penalties with high demand, so that can incur some losses to the company. There is an example of Vodafone SR Limited. Vodafone SR was a very big player in global telecom industry, even in India also. But then there was a case regarding spectrum and regarding taxation issues. Thereafter, still Vodafone is struggling. That means there was some compliance risk was also there, and reputational risk, as we discussed about in the case of Tata Nano. So basically, what is risk? The possibility of something is going wrong. That means what could go wrong is risk. Let me give an example. If you keep your wallet or your mobile on a table in the public place, in restaurant or anywhere, there is a risk of theft. If any company does not do reconciliation or they do not check the bills frequently or properly, there is a risk of cash embezzlement or fraud. So everywhere in our personal life, social life, institutional life, or in any organization, everybody faces the risk, and controls helps to reduce the risk, to mitigate the risk, and to overcome the risk. While talking about identifying and assessing the risk for internal, I am discussing about management perspective. Please don't think that why I am not covering the auditor's part, like sampling and everything. We are not going to discuss about SA 530 audit sampling or SA 505 for external confirmation from the auditor's part to ensure the balance confirmation and everything, or any kind of documentation as per SA 230 from the auditor's part. We are going to discuss from the management's perspective itself. So what management thinks about identifying and assessing the risk of internal control? Basically, first understand the context, why we are assessing the risk. Then they identify the risk, they analyze the risk, and they work on this so and so and so. First ask one question that every management should ask from themselves. How do we identify risk? What is my process? If there are some lacks in my risk identification process, then how I can implement proper controls? Because if there is lack in my process, I will not be able to understand that where can the mistakes happen, who has too much power, whose duties are to be segregated, and where fraud can happen, where money can be involved, where embezzlement can be done. That is why first we have to understand that risk identification process is properly implemented in my organization. Let me give you an example. Let's suppose there is a person who is very much loyal to the management, faithful to the management. That is why management has assigned him the duties of wages calculation, then payment vouchers preparation, disbursement of the cash, and then accounting entries. Somebody raised the question on his duties. Someone asked the management, boss, this is not good. There should be segregation of duties. Kindly authorize one more person who can overview his working. And management replied, no, he is a trustworthy person. He cannot do anything wrong. When I was in practice years ago, almost it's 12 to 13 years ago it happened. I was at client. It was very good reputed MNC, Japanese MNC. My staff came to me and he told, sir, there is cash embezzlement in the company, fraud in the company. I asked how it can happen. The cashier is very much loyal to the management, even Japanese management. They have trust on the cashier. All the accounting entries, they are matching with the cash payment voucher. Cash payment voucher was matching with the list of reimbursement of employees, the total of the reimbursement of employees. Then how fraud can be done? He said, sir, there is totaling mistake. More than 150 employees claimed their reimbursement, 5,000, 4,000, 10,000, 8,000, amount up to 10,000. It is reimbursed in cash. So the total of 150 employees for their reimbursement, at the end, the cashier does totaling mistake. He increases the total amount and he disburses the cash. He keeps the balance amount with himself and do the accounting entry based on the total. Nobody tried to calculate the total of 150 employees reimbursement amount. Everybody matched that the total of reimbursement sheet is matching with the accounting voucher. Cash is matching with the balance as per books and balance as per physical verification. So there is no chances of fraud, but fraud happened in that case. That is why if my risk identification process is poor, if I am not concerned, being management, if I am not concerned about everything, if I am very much concerned about my employees, my faithful to me, or if I am overriding the management controls, then such risk can incur. The common types of risk. What kind of risk can be there? It can be internal fraud, like I have given you an example of cashier. It can be external fraud as well, like any of your customer that may be dummy customer and fails to pay you amount, any false bank guarantee or any false deposit is given to you as security. Any kind of fraud can be done by external party as well. There may be risk of system failure, IT failure. Recently, the system failed in case of Indigo Airlines. The people were suffering from their mismanagement. It was an example of system failure. It was the risk of system failure. There may be related to risk of cyber risk as well as part of a system failure. Ransomware is there. Some people who are sending their virus, Trojan horse or anything, and they are just asking bitcoins. This is also a risk. There may be risk of compliance violation. You are not following any RBI compliance or FEMA compliance, and very huge amount is imposed as penalty on you. That is risk on you. There may be some operational risk. There may be some efficiency related risk. There may be some risk related to management is overriding the risk. Like management is not ready to segregate the duties. The management is not ready to accept that there may be some risk. The management is not ready to implement some controls. So the biggest risk is management is overriding the risk. सोए हुए को जगा सकते हैं, जागता हुआ सोने की एक्टिंग कर रहा है उसको नहीं जगा सकते. तो if management is concerned, no, everything is good, we will not listen, then in that case it happens. Even reputational risk happened recently in AI summit with Galgotias University also. The university, I don't think they may have planned that it will happen with them. Unexpectedly it happened to them. Everywhere there is a risk. And if there is a risk, mitigation plan and control plan should be there with you. How the management sees about internal controls. Now coming on the controls. We are moving from risk to controls. How management sees the controls. First of all, this is not the duty of auditor to implement the controls. Auditor is bound to comment on the controls. This is the duty of management to ensure the designing, implementation and operating effectiveness of their controls. Because whenever management ignores the control, what happens? Fraud increases, cost increases, trust decreases. And if management is very much concerned about the controls or risk, then strong controls are there, strong leadership is there. So the ultimate purpose about in terms of management's perspective for controls is safeguarding the asset of stakeholders, safeguarding the interest of all the stakeholders, preventing the fraud and safeguarding the organization's assets. Very powerful lines are these. After this, we will take some questions. If there are questions, then we will continue. Rakesh sir, you can plan for those questions. Please read these 3 lines. I believe these are very strong lines. They have very strong message. It took 38 years to reach 50 million listeners by radio. Television took 13 years to reach 50 million viewers. Internet took 5 years to reach 50 million users. And do you know? AI took only 1 year to reach 50 million users. How fast the time is changing. How fast it's changing. What exactly this defines? It defines that the world is not only changing, the world is accelerating. And this acceleration is exponential. Every day new technology is coming. Every day the mindset of users is changing. Every day new compliances are there. Every day new competition is created. So this slide tells us that if management thinks we have implemented our controls years ago and there is no significant change in our organizational structure. That is why we can continue those controls. It may cause one day a big collapse to that organization, because the time is accelerating, the things are changing. Now in the era of AI, the business models are dynamic and these are borderless. So therefore management should understand that internal control system is not a fixed or not a static process, that is ongoing process, and every time, every year, every fraction of time we have to reassess it. Because one thing which is told about AI also, the faster the growth, higher the transaction volume is there in every business. When I was studying from IIM Bengaluru, there was one case study while I was studying there. So it was discussed that when the growth is very fast, then the transaction volume will be high. When the transaction volume will be high, the risk exposure will be great. It will be higher. And when the risk exposure will be higher, then stronger internal controls will be required. And do you know that speed without control always leads toward the collapse, and the growth without governance always lead to the crisis. We have seen the Satyam scandal. We have seen the case of Anil Ambani also. We have seen many cases when growth was exponential, but one day suddenly it collapsed. It ruined the efforts of years. Rakesh sir, if there are any questions we can discuss, please.
No, sir, Abhi, no question. But now, any question?
Okay, sir. I request participants.
Total age of total registration 628 participants
Okay, good.
registered now.
So this is the result of tireless efforts done by CPE committee.
Yeah,
Year-long efforts they have made, or not only year-long efforts, efforts for the years they made. That is why people are still connected to them. Otherwise, when COVID came, again it is related to risk and control itself. When COVID came, then people thought how the seminars or how the sessions will be conducted. Then people interacted through virtual mode. But now everything is normal. There is no COVID, nothing. Still, webinars are going on. Participants are joining the webinars. This is the achievement of the committee, and this is an example that how they implemented such controls regarding quality, regarding variety of the sessions, and how the participants they are enjoying the efforts done by CP committee. Okay, sir. Thank you, CP committee once again. All the participants, you are requested. You may kindly ask questions, because whenever you ask any question, because I personally feel whenever I find any question from audience, I learn something new. And whenever I join any session as audience, I ask any question, then I again learn something new. It is said in Sanskrit, there is a proverb कि अपूर्व कोपी कोसवय विद्यते तव भारती व्ययतो वृद्धि मायाति क्षय मायाति संचयात्. This is the beauty of treasure of Goddess Saraswati. As much as you will spread, it will get increased, and if you will keep it limited to you, it will get decreased. So discussion is always a key of learning. Okay, moving on the next slide. Though my speed is little bit higher, because I am trying to cover a lengthy subject in 60 minutes, including the time for questions also. So that's why we should not reduce the time of our another speaker, Palman. Okay, next slide. 3 important types of internal controls. If there is financial risk, then financial controls are there. If there is operational risk, then operational controls are there. And in the current era, IT risk is there. Cyber frauds are going day by day, every day they are increasing. So in that case, IT controls are also required. While performing internal control audit, you do, being a chartered accountant, ITGC audit, information technology general controls. You do ELCs, entity level controls. You do PLCs, process level controls. So who defined those controls? Management. Ultimately, management has defined those risks and those controls, whether it's ELC, PLC, ITGC. The management is worked on all these. So understanding that if there are any risk, the management has implemented control. What can be an example of control? in banking, we see everybody can access their login ID only after putting their biometric impression. Otherwise, if I am working on my ID, there is one password. My colleague, he or she knows my password. In my absentia, with my login ID, any fraud can be done, and I will be held responsible for that. That is why they implemented the thumb impression for the login, for the authentication for their login ID. This is one control. We see that there are certain approvals are required before making any payment. There are certain OTPs are required before making any payment or doing any transactions. The entities do their reconciliations for the banking transactions, for their debtors, creditors, long pending deposits also. Then audit is also part of control process. Now you will say audit is statutory compliance. Boss, statutory audit under Companies Act, that is statutory compliance. But still we see many proprietorship concern, many partnership concern, or many small companies, they also appoint internal auditor. That means audit is not always a statutory compliance. This is a decision of management to control their risk, to mitigate their risk. Let me give you one example for different kind of risk and different kind of controls. I am driving my car. Now I saw road lights are there and there is red light. Red light is preventive control. That is saying me, Dheeraj, please stop. Once it will be green, now it will be your turn. So red light is preventive control. But I jumped the red light. Now preventive control failed. But there is a camera. The camera will capture my footage. This is detective control. Based on those captures, those pictures, those videos, the traffic department will issue fine or challan to me. The challan is corrective control. So through road lights we can understand preventive control, that means control before any mishappening or risk happens. Detective control, if risk took place, misevent took place, accident took place, now to capture that, detective, to find those things, and then corrective control. So if I receive 10,000 rupee challan for jumping red light, let's suppose I never received such challan because I am a very obedient citizen of our country, law abiding citizen, but just assume that if somebody received 10,000 rupee challan for avoiding or abusing the traffic rules, then next time he will remember the rules, he will remember the challan amount. So preventive, detective and corrective controls are there. Now next one is methods for finding control weaknesses. How the management can find the control weaknesses. How management can work on that. Okay. First thing, internal audit management can do. Auditor can be internal or any agency also. External audit, specific management audit, forensic audit, operational audit, production audit, inventory audit, revenue audit. There are many kind of audits. So auditing is one part, one method to find the control weaknesses. Another thing is self-assessment. Many times in many organizations, when the management is very much keen about controls, management is serious about controls, what they do, they implement a process of self-assessment. In a monthly meeting, the team leader, they discuss with their team members what kind of issues they are facing, how they are taking help of each other person, whether they are compromising the integrity, whether they are compromising the security and safety of the data, whether they are compromising with the policies, procedures of the company, whether they are compromising with the designed controls, and they observe operating effectiveness of the controls. The industry is, the company is or organizations, they run the whistleblower program also. Even in PSUs, you will see one vigilance officer in general who is not employee of that PSU, who comes on deputation, maybe any IRS officer, IRAS officer, IDAS officer, ICAS officer, IRTS officer, any officer of any other cadre, he or she is appointed as vigilance officer. This also supports the whistleblower policy. One more thing is data analytics. Sometimes when we see my turnover is same, but my profit decreased, how it can happen? There may be inefficiency in production, there may be increase in the production cost, there may be inefficiency by my workers, there may be unrequired or irrelevant overhead costs are allocated. So data analytics always suggest me where are the gaps. Now I will do the study whether there is any risk, yes or no. If yes, whether control is implemented, yes or no. If no, then how we can implement the control. This is on the part of management. Now let us discuss this slide very detailed. This is an important slide and we can say this is the crux of almost the entire session. Common control activities implemented by the management. Till now we have discussed different kind of risk, how the management think about risk, what are the major components of risk, types of risk, types of different controls, how management thinks about controls, how controls can be implemented. Now there are certain examples how the management implement the controls. These may, one or more may be common or similar in many of the industries. The first one is segregation of duties. Everybody will agree with this. Even if you are a chartered accountant in practice, your article will say, sir, at that particular client, SOD principle is not followed. Then you will be allowed to, really? Because segregation of duty is first principle of control. That means different person, they should handle different tasks. Maker-checker concept should be there. Doer should not authorize the transaction. Like I have given you an example of a cashier who was distributing the cash. Let me give one more example. There is a person who is making payment. Another person is approving it. That means segregation of duty is there. You see in the payroll process also, payroll department is calculating salary amount, but accounts department is making the disbursement. Even in some industries, HR department is separate. HR department is tracking on hiring, retirement, attendance and compliances only. The payroll is calculating the salary, all the remunerations and full and final, and accounts department is making their accounting treatment. Cash department, cashier, he is making the disbursement of the salary. Another thing is access control. We see in banking, if I am manager of bank, in my bank there are locker facility provided to my customers. There are two keys. One key is with the customer, another key is with the manager. There is access control. But now, if both the keys are with me, will there be any control? It's completely risk. Another thing, cash is kept in a safe. One key is with cashier, another key is with manager. Now, being manager, I said, Mr. Cashier, tomorrow I will not come. I have some work at my home. Keep my keys. Instead of assigning another person, I give my keys to the cashier. Then it's completely risk. Access control is compromised. You will see in many of the industries, except the HR team, nobody else have access to the payroll data also. Even some companies, third parties hired for payroll processing, nobody have access to the salary data or personal data of any employee. Even being auditor, if you ask, you will get the detail of selected samples only. Samples age may be selected by you following the auditing standard 530. Limited access is provided. Control is there. Even you see some industries, especially IT industries, they have card or they have thumb impressions to visit any key area or research and development area. Now, I am person who is authorized to access the R&D wing. I have my card. My card is allowed to access the door and I can enter into R&D wing. I have given my card to my friend who is in another department who is not authorized to enter into R&D wing. But using my access card, he entered into R&D wing. He can leak the research related some information, some personal private information of the company, research information of the company, very important data of the company. So access control is very important. Limited access control is given. The another one is transactional authorization. There are many examples. Person who is authorized to do bank transactions, he will post, but OTP is sent on the mobile of MD. So access control is there. I am filing GST return being accountant, but OTP is coming with the HOD or the digital signature of HOD is to be used. Reconciliation and review. Timely reconciliation is required. Reconciliation of bank, everybody knows. Reconciliation of debtors, yes, nothing new in this. Creditors, okay, nothing new in this. Reconciliation of inventory, yes. Even reconciliation of fixed assets also. Once I found a company appointed us years ago, again, I think it's event of 2013 or 14. One big company appointed my erstwhile firm for fixed asset audit. We went there and we found that many of the laptops are missing, many assets are missing, many furniture, mobile, many assets are missed. That means reconciliation of fixed assets is also required. Even reconciliation of data is also required. So that means reconciliation of everything where there may be differences as in records as per books, record as per physical or as per actual count. So reconciliation is to be done. Physical security controls are there, like CCTV camera is there, lockers are there, security guard are there. These are the example of physical security controls. Change management controls, yes. The company has implemented new ERP and they said, okay, now depreciation will be calculated as per ERP. Inventory valuation will be done as per ERP. There is no need of doing inventory valuation in Excel. In my company where currently I am working, we have solar projects as well. So we have to keep the inventory of every module also, every inverter also, even inventory of wires also. So it is very difficult that on every quarterly basis if we do the valuation of those inventories. So we have to take help of an ERP. Similarly, everybody is taking help. But when there is first time implementation of any system, dummy testing is to be done. There are chances that rate of depreciation applicable or allowed depreciation is 15%, but as per my new system, due to some coding mistake, it is calculating depreciation at the rate of 10%. So my result will be different. Some overheads are allocated duplicately, then my inventory valuation will be different. Even I saw it happened in one ERP due to some mistake. Bank transactions, debit transactions were going into credit balance and credit transactions were going into debit balance. It was found at testing stage itself, so it was corrected. Not only related to ERP, even the top level management also do or follow the rotation processes. Change management is there. We have with us chairman of CP committee, Satish Gupta sir also. The person.
Thank you, sir.
The
Neeraj bhai,
visionary.
thank you very much. But no chairman now. अभी तो that is credit वाला उधार वाला खाता चल रहा है.
But sir, we in the starting everybody was appreciating that this is 95th webinar. So
Yes.
it shows the level of commitment.
Yes.
Even as you are mentioning that Nirvartman Adhyaksh, you are not chairman as of now. Still, the webinars are going on. The show must going on. Go
Yeah,
on.
yeah, yeah.
So that spirit is really very much appreciable, sir. We salute
Thank you,
you.
Dheeraj bhai. Thank you, Rakesh bhai. How are you?
I'm sir fine.
Great.
As
Karo,
of
continue karo. Dheeraj,
seven,
continue, please.
Yeah, thank you.
715 registration. As of now,
Thank you.
715
Wonderful,
registration.
wonderful. Thank you.
Yeah, thank you, sir. Okay, let me continue. The another thing is that is data backup and recovery plans. Not only in IT sector, even in every sector, in any company where the important data is stored. In banking, yes, data recovery is there. IT sector, yes. Now, let's assume there is an automobile industry. Whether data is to be stored there? Obviously, yes. Let's take an example of our mother institute, ICAI. Data backup is also there. Now my question is, how the management can override this control? In general, data backup is there, recovery plan is there, disaster recovery plan is there, but the business continuity plan is there, but still, sometimes management overrides. Let's take an example. I am director, I am top management, I am authorized for data recovery. There is person Mr. A who is IT guy in my company. He is assigned for data recovery, and what he is doing? He is taking the data backup every day in a hard disk, and he is carrying that hard disk in his laptop bag. Every day he keeps the hard disk with him, takes it from company, goes his home. Another day he again comes to the company with that hard disk. Is it sufficient control implemented by the management? One day I fired him. He will break the hard disk, he will erase the data. So data recovery or data backup or any kind of control, not only data recovery or data backup, all the controls, the management should not override those. Next one is related to vendor assessment and management. Recently, one practice is there in big companies. What they do, they conduct the vendor assessment process, due diligence. They conduct the customer due diligence process also. Their financial due diligence, their compliance related due diligence, because if there is company XYZ Limited, this is my key vendor, key supplier. Just because being L1 in the tender process, I shifted all my orders from ABC Limited to XYZ Limited without doing any due diligence process. Later on, I found the quality is compromised by XYZ Limited, and due to compromised quality from my vendor, my production team is not able to produce the desired production as per order of my customer. So in that case, I will lose the orders, I will lose the reputation, and I will lose my business as well. So vendor assessment in terms of financial due diligence, in terms of qualitative due diligence, and even in terms of their goodwill due diligence is to be done. Training awareness programs, yes, obviously like CPA committee is organizing this program. Many programs are organized in the industries as well. So trainings are to be implemented as a part of control awareness. Mark my words, good system plus good people is equals to strong control. That means good people and good control, strong systems, it will result into strong controls. Once, this is a funny picture, but it describes the casual approach of some managements in terms of risk. A board of directors meeting of a company, it took place. Everybody was discussing about risk, and ultimately they decided we have considered every potential risk except the risk of avoiding all the risk. That means skills, they are open to avoid the risk. Risks are not to be avoided, risks are to be mitigated, risks are to be assessed, and controls are to be implemented. So it happens many times. Next thing is finding internal control weaknesses. Everybody know that there are certain warning signs. Based on those warning signs, controls can be weakness in the controls can be identified. One sign can be delayed reporting. There may be some reasons why the reporting is delayed. We see that complaint of a particular person is raised. It is also a sign. One person is repeating the same mistake. This is the sign of weak controls. There are frequent errors by our team members. There are high employee turnover. This is again a sign of control weaknesses. So control weakness is there, yes or no. If you want to check it, we have to follow this entire process: assessment, review, then documentation, then remediation and monitoring. But basically, there are some identifications, there are some signals of control weaknesses which I told you. So focus on those signals, or similar signals can also be there. We can say, if control weakness is ignored today, bigger fraud or bigger risk will be tomorrow. If any difference is in my today's monthly report, reconcile it today itself, otherwise at the end of the year the gap will be very much high. There are chances of fraud, there are chances of mismanagement, there are chances of losing the business. Then if we, after finding the weakness in the controls, how we can improve the controls, what the management can do? First thing, besides all these, I am not repeating the line to line of the slide. Besides all these things, first we have to check that whether the policies are there, processes are there. As I earlier told you, PLCs, process level controls, O2C, P2P, your payroll control, treasury functioning, your PP related controls, all kinds of controls, R2R, you know all the controls. So assessing all these controls, whether the policy is there, processes are there, whether these are implemented, whether the controls are designed, whether the controls are tested, that these are effectively implemented or designed effectively, operational efficiency of the controls are there or not. One more thing is use of technology. Technology always help us, automation always help us, like using this webinar technology. Many people are joining from across the country, anywhere, anytime. Even recording will be available, anybody can have access to that. So automation or the technology, process level, then monitoring, continuous monitoring, trainings as we have discussed, and some surprise checks. If management do all these things, then internal controls can be improved. Remember, the internal control is not a one-time activity, it is a continuous process. It is to be continued. Regarding, I will sum up in next 5 minutes, then we will take questions, and Satya sir is also with us. So designing operating effectiveness of the controls. First thing, policies there, yes. Whether properly designed, yes. That means designing effectiveness. But whether implemented and followed by the team members, that means operating effectiveness. In reality, if it is happening that payments are made without approval, but I have the policy that payments require the approval of the boss, in that case controls are failed. In summary, let me tell you, good design plus poor execution, it will result into failure. Design is good, execution is poor, it will result into failure. Execution is good, but design is poor, there may be risk. But if good execution with good design, then strong controls will be there. Both are necessary to ensure that controls are there. These are important controls. Already in all these slides we have covered all these things. How controls are important? Yes. Compliances related with the regulations. If controls are not there, there may be huge penalties that can be imposed to us. There are certain chances of the fraud also. We see Satyam and many more cases. To ensure the financial integrity, again controls are required. To ensure that the confidence of our investors or stakeholders, these are required. These are the things. I am not repeating one by one. Slide is PPT is already shared with the committee. You can obtain from there. But main thing is, if you want to ensure your operational efficiency, if you want to ensure your financial efficiency, if you want to ensure your reputational efficiency, and if you want to avoid all these three kind of risks, then internal controls are important, and you have to implement, test and redesign and re-implement the internal controls. Otherwise, you have the policy just like these paper all these will be piece of paper and there will be no result of this. Thank you so much. If there are any questions, we can cover. Rakesh sir, over to you. Thank you, everybody.
You, dear sir, for those valuable insight of raise, find, risk, plan, control. Now, one question is available on chat box. B.V. Madan Swami. How an auditor assess the self-assessment control?
Fine. First of all, this session was, let me clear, which I have cleared in the starting also. And why the question came? Because this session was from the perspective of management. So we have discussed from the management perspective. And we covered that management has implemented self-assessment related controls. Now he is asking, being auditor, how we can ensure whether the self-assessment is done properly or not. Let me give you an example of self-assessed control. In a company, there is a process of monthly meeting. In every monthly meeting, the boss of the entity of that particular department, he meets every employee one by one of his team. He meets the managers, deputy manager, team members for 10 minutes and just discuss, okay, do you have any issues? Your working is going good? What kind of support do you require? So such discussions are made with him. In those discussions, the employee gives feedback, sir, that particular vendor is creating pressure on us to release the payment. That particular employee, the HOD of another department, he is creating pressure on me. So employee gives their feedback and the boss of that department, he discuss with other people, he discuss with the top management and they ensure that such things are not repeated again and again. This is self-assessment and self-assessed controls. Now you are auditor, this is your turn. The management said, yes, we have policy of monthly meeting. We discuss with our team members, our HOD takes the actions. Our HOD discuss with the management. Interdepartmental HOD also ensure their discussion and they ensure that every department is supporting the functioning of another department instead of creating hurdles in their workings. Being auditor, you should ask one question, whether it is documented or not. First question, whether it is documented or not. Now management will say, yes, it is documented. Very good. So in the documentation, whether only policy is documented or the process is documented. Let's example, a finance department HOD CFO. He has documented the feedback given by accountant, all the team members, and one accountant or the cashier gave the feedback that the purchase head is insisting himself to release the payment of ABC Limited on priority. Even though the credit time is 30 days, but he is forcing him. Boss, why you are not clearing their payment? That is our key vendor. So accountant has given this feedback. It is documented in that process, in the self-assessment process. And based on that, what CFO has done? CFO has discussed with the purchase head. Now in the next month, whether the same accountant has raised the same question, if not, then action is taken on the self-assessed controls. If again same query is there, same response is there, not only by that accountant, not only related to that particular entity, not only related to that particular employee of the purchase department. If the similar problem is still persisting, that means self-assessed control are still poor. If these are poor, being auditor, what you will do? You will just increase your sample size. It doesn't mean that self-assessed control are poor, then you will report it. First, you will increase your sample size. If ultimately overall controls are implemented, you will give your comment that the internal controls are sufficient, commensurate to the nature and size of the business of the entity. And if you observe that control weaknesses are there, then you will report it. Yes, sir.
Rest of control frequency, how?
Sorry?
Rest of control frequency.
Control frequency. Depending upon the
Yeah.
risk, depending upon the control. If I am talking about control related to purchase, the frequency is every day. If I am talking about the controls related to salary revision, then frequency may be annual. If I am discussing about the controls related to bonus or leave encashment or all these things, that can be biannual. If I am discussing about the controls related to full and final settlement or recruitment process, then the frequency may be as and when. Frequency cannot be similar for every control. Even level of control cannot be similar for every risk. Depending upon the risk, depending upon the frequency of the transaction, the control frequency will be different, sir.
Okay, sir. Sir, how to predict reputational risk?
Is how to
Reputational risk.
reputational risk. Already we have taken an example of Tata Nano. Reputational
Tata Nano.
For reputational risk, two things are to be done. First, very much important thing, that is feedback. Even though it is recording, so I am not predicting, but you may see some reputational risk with Ola Bike also in future. You may see the same case. You may see in the case of Galgotia University, reputational risk is there with them, associated with them after this AI summit. So first thing is feedback. Feedback from your customers, feedback from your vendors, feedback from the general public, feedback from ultimate users. Feedback is very much important player to mitigate the reputational risk. Second thing, the qualitative controls or qualitative measurements, not quantitative, qualitative measurements are implemented in your internal structure. Let's suppose I am CFO in a company. I am representing my company in any event and I made loose talk. It will be a reputational risk for the entity as well. Same just like Galgotia University. Let's take another example. I am director of a company. I am doing meeting with my competitor, or we are sitting with some arbitrator for a conciliation or arbitration related to my vendor. It may be related to anything. It may be related to my industry related meeting. It may be related like meeting of CM for automobile industry, meeting of paper association for corrugation industry. And being director, if I do any false commitment, again this may be chances of reputational risk. So there are two things. First, feedback system. Second thing is qualitative control on my control structure. These two things are very much important to mitigate or avoid the reputational risk.
Okay, sir. Thank you. Thank you for
Thank you, sir.
patiently
Any other
addressing
question?
all the queries with such clarity. No question, sir.
Okay. Thank you so much, sir.
Thank you, sir.
Thank
Thank
you,
you
Rakesh
sir.
so
bhai,
much.
you can ask more queries. He is expert. He is
Yeah,
proud.
सर
He
लेकिन
is proud of.
टाइम बारी है सर, टाइम बाहर कर रहा है,
Yes.
मैडम
Please go
वेट कर
ahead.
रही
Go
है
ahead.
और
Payal is
इससे
also there,
पहले,
na?
हाँ, एट दिस मोमेंट वी स्टार्ट सेकंड सेशन. Before, at this moment, I seriously invite for giving few words to the dynamic chairman of CPA committee 2025-26, C.A. Satish Gupta. His
Thank-
efforts enhancing the quality and global reach of our CPA programs through the successful implementation of new initiatives throughout the year. Sir, Satish Gupta, sir, please.
Thank you,
Words.
Rakesh bhai. Thank you. And I welcome Dheeraj bhai.
Okay,
I
sir, thank
welcome
you.
Payal. Both are from
Thank you,
Jaipur and
sir.
both are very dynamic chartered accountant. I also welcome all the delegates who in very large number attending this 95th webinar of the CPE committee. It is definitely an achievement and it was a failure also because I was expecting around 100, more than 100 webinars. So, and I could not do 100. So that is a failure on my part. But we tried our best that we can deliver knowledge, we can deliver values through these webinars to our worthy members. We try to invite this time to faculties from the foreign countries also, and they expressed their views that how the chartered accountants can get opportunity in their respective country. We also invited the industry experts who also explained how their industry can be beneficial for chartered accountant point of view. So we tried a lot this year, and but everything comes to an end. So this is the end. I think few more webinars may be there before Honorable President give the charge for next year. But we are committed professional. We are committed that how whatever position we have, we want to deliver something for our members, for the profession, for the fraternity. Friends, one I would like to say sorry for one more thing that we could not execute that real-time CP attendance system, which we tried a lot that we could bring this by 12th of February. But due to some government sanctions, government permissions, and some UAT work pending, so this could not be done by 12th February. But believe me, it will come by March end maximum to the real to the reality, and it will be a reality. And I feel that after that, the quality of programs will be wonderful. It will be increased a lot. So this is something which I wanted to talk you. I just wanted to one more thing that UDIN, we have launched the mobile app. So if now you can generate the UDIN on your mobile app, even the verification can be done by the stakeholders on the mobile app. So try on your mobile, whether it is Android, whether it is Apple. So you can go and upload that UDIN app and try to generate UDIN on your mobile app. Feel that how your institute is working for the benefit of our members, how we are trying to facilitate our members. Now, if you are away from your office, you can generate the UDIN simply from your mobile and very simple way, in very simple way. So this is something we have done in UDIN Directorate. This is something new. We have done a lot work. I think in the entire council, the council colleagues are saying that it is the year of reforms for the UDIN. It is the year of reforms for the CP, and luckily, I was the chairing both of the committees, so I could do this because of the cooperation you people extended to me, the council colleagues extended to me, and the guidance of the president and vice president. We did several works in the CMP also, friends. CMP, I was the vice chairman, but I just want to tell you that. Two things. One is the AU credit card. Although personally don't like credit card, but believe me, this is something very good for the members because you can get discount of 25% while paying your renewal membership fees to ICI from the credit card company. And this is not a small amount. I think it may bring a smile, a short smile, I can say, small smile, I can say, to your face that yes, something is being taken care of by the institute. We have also made one more arrangement this time that we have with the Tata 1mg. If you purchase any pharma items, suppose medicines from the Tata 1mg, the member will get 18% discount, 18% discount on the direct purchases made from the Tata 1mg. I think it is very big discount. And if you go for the diagnostic from through Tata 1mg, the discount will be 50%. And there are three packages also of the Tata 1mg. So anything, I don't wish that any member need all these things, credit card or pharma things or the diagnostic. But unfortunately, if anything comes to our life, don't hesitate to visit CMP benefits and to take call of that particular facilities which we are providing. We have also provided the cloud. You can get the discount cloud space on very, very handsome discount. You can get the discount on CIBIL. We have also made a tie-up with the CIBIL authority that our members can check the CIBIL of any person if they want to that, and that is a very good empowerment, I think, on very, very minimum charges. So this is some work done by us. We are working. If opportunity is given to me or some other council colleague, we all are committed and we are working that we can bring some good news from the that Adobe, that Meta AI, that Google, that we are trying that we can bring some more such an encouragement. So not taking much of time. No, Payal is very angry with me. I am sharing his time. कि 5-10 minutes I have used,
No,
but
sir.
I know that she's a wonderful girl and doing very good profession at Jaipur or throughout the country. So thank you, Payal. Thank you, Dheeraj Bhai. Thank you, Rakesh, for giving me this
Thank you,
opportunity,
sir.
and thank you, members, for listening me. And we will meet definitely again. Thank you. Thanks a lot. All the best, Rakesh Bhai. Over to Rakesh.
Thank you. Thank you, Satish sir.
Thank you
Your
so much,
efforts
sir.
are always
Thank you.
dedicated
Thank
to
you,
growth
sir.
Thank you.
of we professionals.
Bye-bye.
Thank you, sir. Our second topic of this webinar is recent change in Income Tax Act 2025. Flooded Speaker C.A. Payal Chauhan from Jaipur. Before handover, it is now my privilege to introduce our second esteemed speaker, C.A. Payal Chauhan. She has over 15 years of experience in taxation. She has been actively mentoring CA students in corporate law and taxation and has been associate as faculty for ICI live classes, orientation programs, and MCS courses. She is also a guest faculty at prestigious universities. We are fortunate to have you with us today. Madam, I now request you kindly take over the session. Welcome.
Thank you, Rakesh sir. Thank you very much. I'll share my PPT and tell me
Yes.
audio video is perfect.
Yes, yes, yes.
Is the PPT visible?
Yeah.
The PPT is not visible to me. It's taking a bit of time. Yeah, the PPT is visible.
Okay.
Perfect.
Perfect.
Just tell me that audio and the video is perfect so that I can start up with my session.
Perfect. Perfect.
Ji ma'am, you can continue. It's visible.
Continue.
Okay. So, welcome everyone to the session, and thank you a lot to Satish sir and CPE committee for giving me the second honor to be the guest lecturer or the session expert in Income Tax Act. I know I'm a bit short of time, and the act is too large to explain, and it will take a lot of time, but still, I'll make sure to explain certain things which we have not yet discovered or we have not found it till now. We all know that Income Tax Act 2025 have been enacted. But the question of mine is this the second change or a third change? So I know the chat won't be visible to me and it will be asked in the later on session. So if I wonder, I have 40 minutes with you, with everyone to share my views. Let's get to background. Income Tax Act 1961 was the second Income Tax Act which was applicable on India. The first Income Tax Act was introduced by Britishers. So we'll have a bit knowledge about why the changes were required, right? So it was introduced by Britishers and Sir William James. And he introduced it in 1860 because Britishers wanted to recover the losses which they made in 1857 during the revolt. So they introduced the Income Tax Act with an intention to charge as much as tax they can from the Indian people. And we feel this act in itself is too money taking from our purchasing power. But the initial act was actually drafted to take Britishers as much as wealth they can have it from India. Then, once we got the independence, we've got Income Tax Act 1961, which came into force on 1st April 1962. So this is the Income Tax Act which was propounded, which was made by Indian Parliament. So it was not that hard. It was not that harsh on Indian pockets because it was considered after keeping the income of Indians and it was for the benefit of Indians. But the point was, with the passage of time, the act became old. It becomes bit not up to the mark which we require today. So there was actually a requirement that a new framework, a new act to be enacted just in order to have a passage of timeline with the new modern era. So there were many defects in it, and to overcome those defects, we have Income Tax Act 2025, right? So I'll start with a smile that it says Income Tax Act 1961 has 298 sections. It usually says it has 298 sections. I know we people are very good with sections. So is that really 298 sections? The question is this. Because if we remember section 44, we have ample of sections in 44 itself. We have 44AA, we have 44AB. Everyone remember now? We have 44AE, we have 44AD. Yani 44 in itself is not a single section. Rather, it has ample of sections within itself. The same way we have section 35. 35 was not only the section. We have section 35, we have 35 AD, we have 35 triple C. So there were so many other sections involved in the same section. So if you ask me, it's not 298 sections. Rather, it is much more sections as compared to 298. And then we have a very difficult language written to it. So as in chartered, we still understand, but as a student, when I was there and taking my tax classes, I used to feel so boring that I could not understand what's written. Why can't the law language be very simple? So just in order to get back those demerits which were there in Income Tax Act 1961, it was actually eliminated by introducing Income Tax Act 2025. Usually, when a new act comes into the picture, into the market, we've got rumors, we've got chaos that a new act is coming, a new act is coming. But after reading the act, I came to know actually it is not an entire new act. It is just a same act with a better presentation of sections, with a better presentation of language, just in order to make it more understandable and make it a law language more clear. So Income Tax Act is basically not, Income Tax Act 2025 is not basically a new act altogether from 1961. No, it is almost the same act having a language difference which make a new act more simple. One more thing which I have to be very precise with, and I have to tell you out, whenever a change has to be introduced, it is same going on. The change will be introduced by Annual Finance Act. That means 1961 Act and the 2025 Act are not so different. They are almost same. And if government want to introduce any change, it will be introduced in Annual Finance Act. And we all are used to it. Wherever we have a new Annual Finance Act, we go through the changes. So this is a basic content which I wanted to share before starting the section revision, that I wanted to compare with. See, this is section 1, what got changed and what was initially there. So how much sections I could cover, I'll try to cover them up. So now, as we begin with Income Tax Act 2025, I have a target. I've thought myself to take it for section 14, but I know I'm short of time. So how much sections I could cover, I will definitely cover them up. So as in just a comparison between, wherever we talk about section 1, we all know it's all about objective, the scope, the extent. So the section 1 was dealing in Income Tax Act with the same thing, and with the Income Tax Act 2025 with the same thing. Then definitions are always there in section 2. So in both the sections, in both the act, we have definition part in section 2, which is subdivided into clauses. Usually in the later act, it was in the clauses. And now we have clauses also and some other things also. Then we have definition of tax year. So let's revise. Whenever we had section 3, it was previous year. Now the concept of previous year has been shifted to tax year. So yes, section 3 is no doubt being changed. Then we'll be discussing in detail, but let's have a quick recap of it. Then we talk about section 4, charge of income. So both the side it is charge of income, not as such definition change. Then scope of total income, section 5. There also we have section 5, and here also scope of total income. Then residential status, there also it was under section 6, and here also it is under section 6. Then income received or deemed to be received in India was dealt in section 7 in the later act. Now, in this act, it is in section 7, but we've got one more thing added in it, which is section 8 in it. For example, the dividend income was in section 8 in the last previous act, but now it has been added to the income deemed to be received or dividend deemed to be received in a tax year. So 7 and 8 has been merged. Then we have section 8. We've got a new entry. Usually in the old act, section 8 was related to dividend income. Now it is related to income on receipt of capital asset or stock in trade by specified person. Specified person here means the member of HUA, member of AOP, BOI, and the partner of firm, and those are the specified entities. Then section 9 is the same thing, income deemed to accrue or arise in India, which was there in the later act also, but a bit change has been made, and the change is we have to read it with schedule 1 as been already mentioned by everyone. We've got 16 schedule in the new act, and schedule 1 deals with section 9. Then section 10, if I talk about, usually we used to have exempted income in section 10, but now the exempted incomes are not in section 10. Rather, it has been given for civil code between Portuguese. If anyone remember, after Goa liberalization, we will be covering it. I'll make sure I'll try to cover as much as I can. So section 10 now governed with Portuguese civil code on family income, concept of family income. Then what we had in section 10, the exempted income, is now under section 11 and 12, which is income which do not form part of total income, but it will be read with schedule, and schedule number are 2 to 7. Then we have section 12, which is income not to be included in the total income of political party and electoral trust, which was usually there in the later sections. Then section 12, if I talk about, same, it has to be read with schedule 8. Then computation of total income. Computation of total income now deals with section 13 to 95, and heads of income, which was there in section 14 in the later act, is now in section 13, and section 14A, income which do not form part of total income, is now covered here in section 14. So without wasting time, I know it becomes very confusing when we talk about or when we talk in sections, but when we'll be discussing the section, it becomes easy. So without wasting time, we'll start up with Income Tax Act 2025. Very important, this act consolidate and amend. I've already told it has not changed the old act, it is still there, but it has amended certain provisions. Then if I talk about the first thing, short title, extent and commencement, which is section number 1, this act, I'm talking about Income Tax Act 2025. This act will be known as Income Tax Act 2025, and it extends to whole of India. We people remember, since I have a practice of last 15 years more. So when it comes to whole of India, when I used to learn, it was except Jammu and Kashmir. And now this Jammu and Kashmir has been abolished with that word, and it is on whole of India with the abolishing of article number 370. So it extends to whole of India. Save as otherwise, it will come into force on 1st April 2026. So we know 1st April is almost approaching, and our new act will be applicable. When I talk about definition, which is section number 2, there are not so much changes in the definition, but still the definition which have been changed, I have covered. Like, for example, they've covered the definition of accountant. So accountant has been given the meaning as assigned in section 515. That is, they have made change in there. Capital asset is the same definition which we used to do there also. Then we have a rural agricultural land and a urban agricultural land difference. That's the same thing. There is no more difference, no such difference. Then personal effect, the same thing which we used to take care of, gold, the jewelry, the drawings, the painting, the sculptures, the same thing. Then population, the last census. Property, that's the same thing. Include a right in the management or control, same. Security, the same thing, which is mentioned in Security Contract Regulation Act. Then charitable purpose, the same definition. Okay, child. Child here, there is a bit difference that child in relation to an individual include the stepchild and an adopted child for that individual. So the definition of child has been given care of. Then dividend, the actual dividend and the interim dividend and the deemed dividend remains the same. No change in the definition. Domestic company, Indian company, the definition remains the same. No changes. Fair market value, the same thing. Firm, including LLP, the same thing. Then foreign company, which is not a domestic company, the same thing. Foreign currency, the same definition. Hearing, same, that it includes the electronic mode also, no changes. Then India, the definition remains the same, no changes. The all the zones were as it is same: exclusive zone, continental shelves, and territorial water. Everything same. Then long-term capital gain, that's the same thing. The asset which is held for more than 12 months, long-term capital asset, and the gain will be long-term capital gain in terms of security. In case of others, the period is more than 24 months. That's the same. Person of Indian origin, as mentioned, it is same. If your parents, your grandparents, including both maternal and paternal, are born in undivided India, or either you are person of Indian origin, the same thing. They've not made the change. Very, very important, which we should take care of. When it term, the definition of relative have been changed, and it is very important as per Hindu law. Hindu law, the relative means the paternal one. The relative means the paternal one. But income tax apply on all the caste, all the religion. So the point was in terms of relative, and for the Hindus, are we have to take the maternal relatives also? So in this definition, the equation is made very clear that in relation to an individual means the husband, wife, brother, sister, or lineal ascendant. And there was a question, but now it has been mentioned separately that it is maternal as well as paternal, a descendant of that individual. So that's a change where they have brought a change into that the word maternal has been specifically mentioned. Then the different Reserve Bank of India definition is same, resident same, slum sale same, which we used to talk about in capital gain, same. Spatial economic zone, definition is same, no difference. Stamp duty value, same. Then tax means income tax chargeable under this act. This is a change because now it is Income Tax Act 2025. Then we have total income. We'll be doing it and I'll be explaining as much as I can. Total income, same thing, section 5 as computed. Transfer, the definition is same, which we used to take it in capital gain. Then valuation officer, the definition remains same, which we used to have it in capital gain, 55A, the older one. Then digital, virtual digital assets. This definition has been incorporated, which means any information, code, number, token generated through cryptographic means or otherwise. Any number, any code, any token which is generated through cryptographic means will be taken as virtual digital asset, but it does not include Indian currency and foreign currency. The definition is a bit long, but for us, it is like if anything, any number, any token is generated in cryptographic means, that will be taken care as digital, virtual digital asset. So this definition has been introduced. Then a non-fungible token of any or any token of similar nature, anything which is of art value, that is also added to the definition, or any other digital asset as the central government may by notification specify will be taken as virtual digital asset. So this has been taken care of. And then we have, yes, central government can exclude any digital asset from this definition. The power to central government has been given. So I have taken bit of definition where changes have been introduced or a new definition has been enacted. So rest of the definition remains same with the different clauses, but of course. Now, the concept or a definition of tax year, we as professional have already known this concept, but still I'll take it once more. Usually we had a concept of previous year, the year in which we earn taxes, and we have a concept of assessment year, the year in which the taxes has to be paid to the government, which was actually a bit complicated and confusing. Now, the provision of previous year and assessment year are no more. Rather, we'll use the word tax year. But for my notice, I thought, why not to share this? When I talk about 2025, 2026 and 27, just a small question. Okay, so if I'm talking about a previous year 25 26, the assessment year will be 26 27, right? Now the thing is, assessment year is in terms of Income Tax Act 1961. Now the thing is, the new act, which is Income Tax Act 2025, is getting applicable from 1st April 2026. That means 26-27 is an assessment year as per Income Tax Act 1961 for the previous year 25-26, as well as it is the tax year also. And this is as per Income Tax Act 2025. So if I talk about year 26-27, it has both the characteristic. It's an assessment year as per Income Tax Act 1961, and it is a tax year as per Income Tax Act 2025. Now the thing is, if 26-27 is the tax year, then 26-27, sorry, 27-28 will be the financial year. We'll take the concept of financial year for that. No assessment year, it will be the financial year, right? So we have a concept of tax year. Now we'll go through it. For this, for the purpose of this act means the Income Tax Act 2025. Tax year means the 12-month period of the financial year commencing from the 1st April. I know everyone is aware of, but still, is the financial year or the tax year has to be of 12 month? The answer is not. It is not of the 12 month. Any
Problem in volume, connectivity, file, file name, file name.
Rakesh.
हाँ file name. Yes, yes.
Yeah, Rakesh, sir. Now I could hear you up, right?
Yeah, yes.
हाँ
No,
जी.
no.
Yeah, I could hear you up, sir.
वॉल्यूम क्लियर नहीं है आपका वॉल्यूम क्लियर नहीं है.
Yeah, sir. Is the audio video clear?
Yeah, yes.
It's clear, ma'am. You can proceed.
Sir, there's no picture visible on my. Can I continue because I cannot see my own picture there?
It's visible now, ma'am.
Continue, please continue.
Continue.
Yes, you can.
So, sorry for the. Perfect. So, sorry for the glitch. We'll be back to our topic. So, we are doing the definition of tax year as mentioned in section 3. Usually, section 3 deals with the concept of previous year, which has now been shifted to tax year. I've already explained when I'm talking about the financial year 26-27, it's the assessment year as per the old act, and it's a tax year after the commencement of the new act, right? So we were reading the provision, but without reading also we can do it. Tax year is usually, it commences from 1st April for the 12 month, but it is not always the case of 1st April. If the business has been newly set up, then it will be commencing on 31st March, but it will be starting from the date when the business commenced. Or when a new source of income comes into existence for the first time, then your financial year, that is the tax year, will be starting from the day when the new source of income come into existence, but it will be ending on the said financial year. So that was a concept of tax year which have been made a change in the new act. Then the next thing is charge of the next section which we'll consider with. So section 1 was extent, section 2 was dealing with the definition, section 3 was dealing with the tax year, and now we'll talk about the section 4, which is charge of income tax, which was also there but with a slight changes in it, where any central act enacts that income tax shall be charged for any, see the change have been made to for any tax year. So that's a change which they have incorporated in the charge of income tax. At any rate or rates, income tax for such year shall be charged at that rate or those rate in accordance with and subject to the provision of this act. That means no asset change made to it. The only concept of tax year and this act have been incorporated. So charge of income tax. Then we have scope of total income. There is a bit confusion and there is, can I ask everyone a question? What is total income? So usually we have an answer, gross total income less deduction under chapter 6A gives us total income. This is what we usually says. This is the concept of total income. But actually the point is not that. Total income scope differs with your residential status. The concept or the scope of total income for a resident will be different, and the scope of total income for non-ordinary resident will be different, and for non-resident it will be different. Rest it remains the same, but still we'll do it. For a we people are practicing and we already know for a resident global income is taxable, whether it is received or deemed to be received in India or whether it is accrued or deemed to accrue in India. So that's the first thing. I'm not going with the slide. I'm not reading it. I'll explain it. That for a person who's a resident, global income is taxable. This is how these people have given the new language with. Now, if I talk about non-ordinary resident, for him, the global income is not taxable. If any income is coming from the foreign source, then it is only taxable when such business or profession is set up or controlled from India. So there is a different scope. And when I talk about a non-resident, for him, only income deemed to received or income accrue or arise in India is taxable. This is how they have made the language bit easy to understand. Then we have resident in India. Okay, so with this section 5, I've made you very clear. The scope of total income differs for the different type of assessee. If it is resident, it will be different. If it is ordinary resident, it will be different. And for non-resident, it will be different. So we'll not go with the basic equation which says GTI less TI is total income. That's okay, but the scope is entirely different. Then residential status in India, which was there in section 6 first also, and here also it is there in section 6, but with a very easy language. Let's recap the older one. We used to have residential status of individual, HUF, AOP, BOI. Then we have company, which was dependent upon poem, place of effective management, right? Everything remains same, but the language have been made easy. So I'll go through with the older provision. It was, if an individual need to be resident, he has to be in India in the relevant previous year for 182 days or more. And there was one more condition, that in the relevant previous year, it was 60 days, and the preceding 4 previous years, it was 365 days. So that was the old language. Now we'll go to the new language. For this purpose, for the purpose of this act, residential status in India in a tax year, the word have been substituted, shall be determined with the provision. Now see, if I'm talking about an individual in India for a total period of 182 days or more in that year, so it becomes very easy. For the tax year, we are computing, if the person is in 182 days in India, he's a resident. Or see, now the change have been cumulatively for 60 days or more. It was not there in the older act. Now they said for a cumulatively 60 days you there in the relevant previous year, which is the tax year, and in India, and cumulatively for 365 days or more in the preceding four tax year. So see, the word cumulative have been added to make the definition more easy. Then if everyone remember, we have a concept of deemed resident, right? And we also had a concept that there are certain people for whom the concept or the condition of 60 days are not applicable. That runs the same. Everyone remember, a person who's Indian citizen and leaves India in any tax year, we don't have a condition of 60 days. Then member of a crew of Indian ship going on an eligible voyage, that's the same thing. Then citizen or a person of Indian origin comes to visit in India, same thing goes. Now they have made it very easy. They says for these people, the provision of section 2B will not apply. See how easy they have made it, that for these particular people, we don't have a condition of 60 days. Straight away go for 182 days. If it is completed, it's good. If it is not, then not required. So the language have been made a bit easy. Then we had one more concept. If you people remember that if I have income exceeding 15 lakh rupees from the Indian sources, very much clear, from the Indian sources. So the 60 days, the word 60 days will be substituted with 120 days. So that's a language difference, rather the act remains same. So I can say it like this. if I'm a citizen of India and I have income exceeding 15 lakh rupees, and now the thing is, for me, 182 days condition is also applicable. At the same time, the second condition, which was in the tax year 60 days and in the relevant, the preceding 4-year 365 days, is substituted with in the 60 days, get it 120 days. I have to be in India for 120 days. Then the concept is same for the deemed resident. The concept remains same that if, I'll read it, if a citizen of India, remember, is not liable to tax in any other country or territory due to his domicile, residence, or similar criteria, then his total income exceeding the foreign sources exceed 15 lakh rupees, then he will be said to be deemed resident irrespective of his residential stay in India. So that is same as it was there in the later act also. HUF, the rest of assessees, no difference has been made. Okay, now there is a bit difference. Let the side come. So the language have been made easy. Rest thing remains same. Now, when I talk about income deemed to be received in India, later it was in section 7 and still it is in section 7. No section change have been made, but a new provision has been added to it with the concept of dividend deemed to be income in a tax year. Usually in 1961 Act, it was dealt in section 8. Now it has been merged in section 7 itself. And we all know about dividend. We had the dividend declared and we also had the deemed dividend. Everyone must be aware of deemed dividend, which used to run from section 220A, then B, then C, then D, then E, then F, remember? So we have the same concept here also. The only thing is it has been merged in section 7, which was prior dealt in section 8. So the same thing, income deemed to be received in India. Then a new provision has been added, which deals with income on receipt of capital asset or stock in trade by specified person from specified entities. Let's do it in order to understand it. If I'm a member of AOP, BOI, or I am a partner of a firm, and when there is we'll do it, where there is a dissolution or a reconstitution of this entity and it transfer asset, whether capital or stock in trade, then in that case, the entity that is the AOP, BOI and the firm will be the one who will be liable to pay tax, right? If it is a capital asset, the taxation will be done under capital gain. And if it is stock in trade, the taxation will be done, the income will be taxable under PGBP. But the taxation will be C. Any profit or gain arising from the deemed transferred mentioned in subsection 1 by the specified entity. I've already told you the definition of specified entity, which is AOP, BOI firm, right? Deemed to be the income of the specified entity of the tax year in which such capital asset, stock in trade or both were received by the specified person. Specified person here means the partner and the member. Then we have chargeable to income tax as income of the specified entity under the head PGBP or under the head capital gain. And the value which we have to consider will be the fair market value of the date when the partner or the member received the asset. So this is a new introduction which I have told you about. Then income deemed to accrue or arise in India, it deals with section 9 in the later act also, and it deals with section 9 here also. So as such, no changes in it. See, we used to do it same. Any income from any asset or source in income in India, that is income deemed to accrue or arise in India, property in India, business connection in India. Okay, one thing which came to my mind and I'll happy to be shared. Like we have DTAs with other countries also. That means an individual will either be taxed in India if we have a DTA with the other country also, or will be taxed at the other country. But the question is, what is the criteria that the particular nation will charge tax? So the criteria can be two: the residential status and income accrual, right? So the point is we have to take one in order to charge the tax. Which country will take care that the tax will be charged, and the criteria will be dependent upon residential status. If the income relate to other country, but I'm resident of so and so company, and we have a TTA with that nation, then it is the residential status which will depend which nation will charge the tax. So this was a question. This is a thought that came to my mind, and I thought of sharing. So business connections and the same definition which were in the old act also. Now, what is like, we've done this also, that even if you have rendered services outside India, but the payment have been made by government of India to citizen of India, it will be deemed to be income accrue or arise in India. So, if your pension is getting you getting your pension outside India, but that is for the service you've rendered in India, then also it is income deemed to accrue or arise in India. Everything goes same. Then permanent establishment, no changes in business connection and permanent establishment, right? So I'm not going through them so that I can cover where the changes are actually made. So these things go same. Then computer software, the definition is same. Then we have technical fees. We used to have a concept of fees for technical service, interest, royalty, paid to by, if we people remember, paid to a resident, paid to a non-resident. So those things go same. No changes. Now, there is something which you must be aware, everyone must be aware of. We have section 10 with a bit different way. If we remember, we used to have section 5A, and it deals with the family income. When Goa got liberated, and deals with that. I'll get it in a summary form. I'll remind this of when Goa got liberated, as the concept USA follows of a family income, it is introduced there also. That means if a couple in Goa is earning salary, it won't be clubbed. Rather, the salary is with their skill and diligence. It will be in their return only, but all other income will be equally divided between the husband and the wife. So this section was in the last act was dealt in 5A, which is now been taken under section 10, and this concept is only and only applicable to state of Goa and union territories of Dadra and Nagar Haveli and Daman and Diu. So this is introduced in section number 10, and our section 10 in the older act dealt with income which is exempted, right? So now this has been changed. So as I told you, this is a bit change. So income under any head of income shall not be assessed together. Their income under any head of income shall not be assessed together as that of such community of property, whether treated as an association of person or body of individual. That is, if any income mentioned under clause A of the head income other than salary shall be divided equally between the husband and the wife. So this is what I was telling you out. If it is salary, we won't club it. Rather, it will be taken in the individual returns, but all other income other than salary will be divided equally between the husband and wife, and this concept is still prevalent in USA, right? So this has been introduced. Then we have income not to be included in total income. So this is our main section. When I'm talking about section 10, now it's changed in the new act, and here exempted incomes are dealt in section 11. But section 11, it's not complete in itself. In fact, I'll say it they have made it more difficult, because usually we used to have section 10 clause, we people remember section 10(1), agriculture income. Then we had section 10(2), income of HUF, 10(2)A firm, 10(15), the life insurance policy. We had so many, 10(10)D, I'm sorry. So now that was easy to read. But when I read the act, I found it a bit difficult, because in section 11, they have said refer to schedule 2, 3, 4, 5, and 6. And now, like schedule 2, all the income which are exempted, schedule 3 available to residents. So it has become more cumbersome at my end while reading it. Section 10 in the older act was more easy. So section 11 deals with the exempted income, but it has to be read with schedule 2, 3, 4, 5, and 6. So that's a change. Then income not to be included in the total income of political party and electoral trust have been dealt in section 12, right? Usually it was not here. Section 11-12 was dealing with trust. So now it is for the political party. Again, this section is very easy because it says refer to schedule 8. So it has done it in a different manner. So for that, we have to refer schedule 8. A bit changes in the sections. Then head of income, I'll take it computation of head of income. If we remember, section 14 used to deal with head of income, the 5 head of income. Now, the same concept is being dealt with section 13. Section 13 deals with the 5 head of income. That's the salary, HP, PGBP, CG, and income from other sources. Then, we used to have a section 14A. If you people remember, the expenditure of exempted income do not form part, expenditures which do not form part of total income. That was 14A. Now it has been turned into section 14, and it says income not forming part of total income, the expenditure in relation to such income will also not form part of total income. So the shift in the section, rest, the topic remains the same. Then if I talk about salary, usually we used to have section 15, 16, 17. If everyone remember, we used to have 15, the charging section, which is due or receipt, whichever is earlier. 16, we used to have deduction, 16 IA, standard deduction, 16 II, and then 16 III. We used to have these sections, older act. Now it has been changed, and section 17 used to deal with other perquisite and all other monetary emoluments. So this has been changed. Now the section 15 deals with the following income shall not be chargeable to income tax under the head salary. The following income shall be chargeable to income tax, which the salary due from an employer to an assessee in the tax year, whether paid or not. Receipt, they have it whether paid or not. They've entered the salary paid or allowed to him in a tax year by or on behalf of an employer, though not due before it becomes due to him. That is something he's taken advance of or thing, or any arrears of salary paid or allowed to him in the tax year by on behalf of employer. So if you're getting any arrears of salary, that will also be taken care of here. So, sir, can I continue, or I know I could make out that time is running, right?
Time is running,
Sir,
time is over.
time is
Over
running.
हो जाएगा.
Because tax is
तो
such a
इसको
vast subject, now it could not be taken completed up
very
in
vast
40
and
seconds,
cannot be
40
completed
minutes.
in 50-60 minutes. Cannot be completed in 50-60 minutes.
Yes. Sir, is there any query which I need to answer?
Yes. मैम
Yeah.
क्वेश्चन आया है. A question, how and whether fees paid for late filing of car is an allowable expenditure. That's audit report. Late
Sir,
filing
can you repeat the
is
question?
whether fees paid
Sir,
for
any
late
kind of
filing,
penalty? Yeah,
late
I'm
fee,
telling the
not
answer,
penalty.
sir. Late fees.
Yeah,
Sir, I'll sort it in simple words. If anything which is levied on you, which is compensatory in nature, it will be allowed under PGP. But if anything levied to you is punitive in nature, in the nature of penalty, then it is not allowed PGBP.
yeah. Next question, is dividend taxable on clear basis or received basis?
Sir, it depends
Is
which kind of
dividend
dividend it is. If it is a dividend, then it is taxable on receipt basis. But if it is other dividend, then it is taxable or due or receipt, whichever is earlier.
no question more?
Am I audible, Rakesh sir?
Yeah, no any more question.
Yeah.
If any
Okay.
question more,
That's it.
please
Is there any
share.
other question? Yeah.
No question.
Acha, okay.
Conclude करें मैम? मैम conclude करें इसको?
Yeah.
Hello.
Yeah, sir.
Thank you,
Okay.
Payal ma'am. Thank you, Payal ma'am. The new
Yeah,
income
sir,
tax
I could
act
hear you
topic.
up. Thank you.
Thank you.
Thank you, Rakesh
The
sir.
new income tax act topic is very vast and cannot be completed in 50-60 minutes. In spite the limited time, you
Very
have
vast.
explained
Yes,
it.
sir. Very vast. I thought of covering as much section as I can.
Explained it very briefly and excellent coverage. On
Thank you,
behalf of
sir.
On behalf of everyone present, I sincerely thanks our esteemed both speaker for delivering such a valuable and insightful session. The subject was explained with great clarity and depth, and the practical insights shared today have truly enhanced our knowledge and understanding. We are grateful for the time, efforts, and expertise you have shared with us. Thank you once again for such an enlightening presentation. I also express my gratitude to CPA committee and the organizing team for their continuous efforts in enhancing the quality and global reach of our professional program. Have pleasure
Thank you, sir.
and Thank you.